Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about Alibaba, ticker symbol BABA. This is a full stock analysis. Everything you need to know about Alibaba is in this video. So we're going to talk about what the company does. We're going to talk about the management team. We're going to talk about the moat, so like the competitive advantage this company has versus others. We're going to dig in financials. We're going to look at the income statement, balance sheet, free cash flow. We're going to look at different financial metrics on this company compared to competitors. We're going to look at growth. What does the growth look like the last 5 years? What does the growth look like the next 5 years? And we're going to look at risk associated with this company, because there is some. And then we're going to wrap it all up, and I'm going to give you guys my valuation on what this company is and what I think I'm going to get over the next 5 years on this company, because I am a shareholder myself. So you definitely do not want to miss this video, guys. So stick around. Hey, welcome back everybody. The goal of this channel is to help you achieve financial freedom by investing in yourself and investing in your future. This channel is all about the stock market, looking at stocks I'm buying, selling, and also doing deep dive analysis on stocks like I am today on Alibaba. And if you enjoy this video, get some value out of it, please smash that thumbs up button. It really helps out this small channel, pushes the video out to more people. If you like watching channels that talk about the stock market, I encourage you to subscribe to my channel. So let's get right into the stock analysis. So Alibaba is a business-to-business marketplace for buyers and sellers to connect. That's what Alibaba is known for, but they have many different companies within Alibaba itself. In fact, they have so many companies, I pulled my computer out to read them off because I can't remember them all. Not only that, but this company is actually the 5th largest company in artificial intelligence in the world. So they do a lot of different things. And so here's a few companies that are within Alibaba. So we have Alibaba.com, which most people know about. That is basically a marketplace for sellers and buyers to meet. So they have AliExpress, which is for Chinese wholesalers and manufacturers. They have Taobao, I'm not sure if I'm saying that right or not. That's for Chinese retail customers. They have Alipay, which is kind of a payment solution. They have Tmall.com, which is a high quality branded merchandise company. They have AliCloud, which is cloud computing infrastructure. And then they're also connected to Ant Financial. Ant Financial actually provides financial services for companies, businesses that are out there. And what's interesting is that Alibaba has probably the most amazing business model that I have seen out there, period, even better than Amazon. All right, so I'm going to make this as simplistic as possible for you guys. So let's say that there's someone that wants to sell microwaves on Alibaba. Well, they need those microwaves. And before they can get those microwaves, they need financing most likely. So they might reach out to like Ant Financial, get the financing through them. Then they'll reach out to another one, Alibaba's companies, and then buy the microwaves from them. Then they can sell on Alibaba to maybe, the Chinese community or maybe worldwide potentially. And then they also use another Alibaba system called Alipay to actually have the buyers, pay for the merchandise itself. So it's just complete genius. So Alibaba kind of touches every single part of that transaction all the way through from the beginning to the end, and they're making revenue and profits off every single one of those. And when I first started looking into Alibaba, obviously Jack Ma is the guy who comes up all over the place. He's the founder of Alibaba going back to 1999. He actually doesn't run the day-to-day operations for Alibaba anymore. He stepped away back in 2019. Daniel Zhang is the CEO of Alibaba right now. But what really is important is I watched a biography on Jack Ma, and I was completely blown away. I can't remember if it was on Netflix or YouTube. It was over an hour long, and it really gave me a good insight on the thinking and the thought process of Alibaba and why Jack Ma founded the company. He really wanted to help the Chinese community. I mean, he wanted to help people make money. He came from poverty. I mean, the stories he told on there, I mean, he was barely making it. His family was barely making it. People that he knew were barely making it. All he wanted to do was help Chinese people grow, make money, be successful. So that's really the foundation of Alibaba, and I was really impressed. All right, so we've already learned about the business overview of Alibaba. We've talked about management. Now let's talk about the moat of the company or the competitive advantage that Alibaba has. And first and foremost, from everything I've read, Alibaba.com and all their different sites they use are extremely easy to use. And not only that, but they're so embedded in the Chinese community since they've been around so long that they have a very, very strong brand moat. In fact, 80% of Chinese commerce goes through Alibaba. That is an incredible moat within itself, right? So that's very unlike a lot of other companies in the market, like say eBay, for example. eBay is all over the world. They try to drum up revenue, profits all over the place. Alibaba does make money outside China, but they have really focused on the Chinese community. All right, so now let's talk financials. And I'm an accountant. That's what I do as my day job. I help manage an accounting department at an aerospace company here in Colorado. So whenever I'm looking at a company, financials are extremely important to me. And that's how my mind works. That's how I analyze companies just in general. I don't care how great or amazing they say their products are. They need to prove it to me. And the numbers prove it to me, right? So, or they don't prove it to me, depending on the company, right? So let's dig into this. So first off, their market cap is $600 billion. So this is a very, very large company overall. All right, so let's first look at their balance sheet. As of 12/31/2020, their cash on hand was $48 billion. Their long-term debt was $16 billion. So that is really good. They have 3 times as much cash as they have long-term debt. So excellent. Income statement. Now this is the trailing 12 months. The revenue was about $93 billion. Their net income was $23 billion. So again, that is also very, very solid numbers overall. Now let's take a look at their cash flow statement. And really I want to know what the free cash flow is. And free cash flow is basically operating income minus capital expenditures. And so we get a free cash flow over the last 12 months of $44 billion. So that is really, really solid. So even though their net income was $23 billion, their free cash flow is $44 billion. So $44 billion, that's basically the money that they have left over after just paying all their operating activities minus their capitalized equipment. So excellent, excellent. All right, so now let's take a look at some financial metrics that I like to look at personally when I'm evaluating a company. And I want to really see revenue. I want to see earnings growing. Now, it's really important to know what kind of company you're looking at because sometimes there could be cyclicals. There might be a turnaround play that's happening. So you kind of have to know this. Alibaba has been very pretty consistent as far as growth has been. So I want to see, looking back in the past, a consistent growth, consistent earnings to sales numbers. So we look at revenue per share over the last year. It was about a 28% CAGR or annual rate of return there. Now, the 3 years, it's 22%. So that's still really, really solid. I would say, really good companies over 10%, great companies over 15%, you're getting over 20%. That is just incredible. Now, earnings per share over the last year, they had a growth of 61%. That's fantastic. Over the last 3 years, their rate of return has been about 27%, or at least that's what their growth rate has been per year on average is 27%. So those are excellent numbers. So whenever you see earnings per share actually growing above sales per share, that is an excellent sign. Another thing I really like to look at is return on invested capital. So basically that's net income divided by total capital of the company. And when I'm looking at a company, I want to see a 10% return on invested capital on average over the last couple of years. They're over 15%. That's really good. Over 20%. That's incredible. So if we take a look at Alibaba, over the last year was 17%. That's really good. Over the last 3 years, it was 15% on average. That is fantastic. Even when we look at their 10 years, it's 21%. So overall, their ROIC is just excellent. And keep in mind, ROIC is basically a measurement to look at management on how effective they are taking the income and then reinvesting in a company and building shareholder ownership or value overall. So very, very good. Like these numbers. So another thing I like to do too is I want to look at Alibaba and compare it to its competitors. That's really important because depending on the industry it's in, you might be looking at certain profit margins or other type of valuation methods or metrics, and it can be different from sector to sector. So it's really good to compare companies that are very similar as you can. Unfortunately, there's nothing that's perfectly similar to Alibaba, but at least I picked some that were close. So the first one I picked was Amazon. Second one is eBay. And then I wanted to pick 2 Chinese companies as well, too. So we have JD.com, and then we have Pinduoduo. So let's take a look at this. So this particular comparison is looking at profit margins. And gross profit margin for Alibaba is 42%. Amazon is coming at 39%. If you look at eBay is 75%. eBay, it's more of I would say kind of a service industry more than anything else. So they're a little bit different, but they're looking pretty good. JD.com was 14%, and then Pinduoduo is 67%. Now, if we go take a look at net profit margins, Alibaba was 22%, Amazon was 5%. eBay was 24%, JD.com is 6%, and then Pinduoduo is actually negative 12%. So as far as profit margins go, net profit margins go, Alibaba is in solid shape overall, and they compare very, very well to their competition, or at least to companies in the same space. All right, so the next thing I like to look at is growth. I really want to know overall where the company has been the last 5 years. Now I want to see what analysts think over the next 5 years. And Alibaba was actually kind of surprised me. So they had a 30% growth rate over the last 5 years, which is excellent. Now, analysts think it's only going to be about a 3 to 4% growth rate going out over the next 5 years. My theory around that is, there was a lot of news about Alibaba. Recently, we heard about their $2.8 billion fine that they paid. There's possible delisting going on. We'll get all those to the risks here in a second. But, with that, I think a lot of the analysts are kind of baking those risks into Alibaba itself. I personally think Alibaba is going to be 20% plus growth rate still going out into the future. But that's kind of where analysts think is 3 to 4%, interestingly enough. Now, what's interesting, there's 21 people that are following Alibaba, so a good number of people. Now, they think that the price right now should be worth $315 a share. It's trading around $240 a share, so you're talking a 32% upside. So even though analysts think it's not going to grow a whole lot over the next 5 years, they think at least now the stock price is very undervalued. All right, so the next thing I want to look at is investing gurus. When I'm looking at a company or a potential company to buy into, I want to see other investing gurus investing people that have a lot of success. Do they own Alibaba or not? And there are several different investing gurus that own Alibaba. So that gives me a high conviction that they have high conviction that's going to be going well out into the future. And I'll just name a couple of them. So we have Charlie Munger. Oh, he was just recently in news. That's 19% of his portfolio. That is Alibaba. And then we have Bill Miller and we have David Tepper. And again, there's a lot more that are out there. Those are just 3 names that I pulled. And if you ever want to see who's invested in certain companies, go to dataroma.com. That's just an amazing website you can go check out. All right, so let's talk about risk with Alibaba. And whenever I'm looking at a company, it's great to look at the positives, but it's always good to look at the negatives and kind of weigh out, is it worth buying into the company or not? And there are certainly, different risks that are associated with Alibaba. And the first one is the Chinese government. If companies aren't doing what the Chinese government wants to do, they'll step in and make them do what they want to do. We saw that actually recently. Alibaba actually got fined $2.8 billion for having what the Chinese government considered like pushing a monopoly. They were trying to force sellers to going onto their platform and saying, hey, if you go to JD.com or whatever, we're not going to basically push or show your items on our website. So it was forcing people to go off other people's websites to Alibaba, and the Chinese government looked into it and said, yep, that's what's happening, and hit them with that fine. Not only that, but they're on a 3-year probation going out into the future. The next one is delisting, and that has to do with the US, the SEC. Chinese not following accounting standards that the US has, right? So when you're looking at an Amazon, you're looking at a Google, for example, and you're a shareholder and you're looking at the financials, you know that they've been audited, you know that they're good. The Chinese companies, it's not the same way, and unfortunately a lot of people got hurt over the last couple of years on different companies that were just fibbing the financials, and they lost a ton of money. And so Alibaba is actually audited by PricewaterhouseCoopers. So it gives me a little comfort that at least it's a big company. It's one of the biggest companies in the world is auditing them. And I don't think PricewaterhouseCoopers would put themselves in a situation where they wouldn't be truthful, or at least making sure that the financials are correct. And then, the last thing I would say is competition. So even though Alibaba has a big piece in Chinese commerce, you're talking 80+%, there's other companies. You have JD.com, you have Pinduoduo that's coming up. And so how are those players going to, fit into all this? How much are they going to take from, Alibaba? There's a lot of speculation out there with, the fine that happened, 3-year probation. Is JD.com going to go knock on the Chinese government's door and say, hey, Alibaba's not playing well again? You go look at them, and Alibaba is like just spending all their time trying to fight the Chinese government and not worried about, running their business. So that is another risk to think about. All right, so next let's talk about valuation, and I'm going to talk about how I valued Alibaba, what I think the shares are worth right now, and what I think they're going to be worth going out 5 years into the future. And there's different valuation methods you can use. You can use like a discounted cash flow method. This particular one, I'm going to use a margin of safety analysis, which works really well for companies that have a lot of profit going out into the future, or a lot of growth, let's say, going out into the future. So it fits well with Alibaba. So if I'm going to buy an Alibaba, I want to know that I'm going to get at least a 20% rate of return per year for my shares going out into the future. So I get a target price. So if I take the earnings per share, the average PE, the growth rate I think it's going to be, and then a minimum 20% rate of return, come up with a target price of $238 for Alibaba shares. And if Alibaba has 22% growth rate, which I expect them to do over the next 5 years, I think the stock price is going to be around $593 out 5 years from now. And I'm not your financial advisor. Please do your own research, do your own valuations. This is not stock advice. This is my personal valuation, how I value Alibaba, and what I think. All right, so that was my full stock analysis on Alibaba. So if you enjoyed it, please smash that thumbs up button. I have 5 figures in Alibaba myself. It's one of my biggest positions in my portfolio. I'm heavily invested in this company, so I really want them to do well going out into the future. This is a company that, I have been watching for, a long time, years. And I've been kind of watching what's been going on in the news, and even though that they, had their recent fine, the potential delisting and all that kind of stuff, right now I feel like it's a lot of noise, and short term, it's creating a lot of different events with this company. And so when it started dropping below, the 230 price point, I was like, I have to buy in at this point. And so I bought a chunk of it, and then I found out Charlie Munger bought some, and it sped up my process of buying more Alibaba just in general. And so Charlie Munger, which I actually talked about in a previous video, he's actually treating Baba almost like in place of a cash position in his portfolio, even though it's 19% of his total portfolio. He says that he'd only invest in a great long-term company that he knows he's going to get some money back and he's not going to lose anything. And he thought Alibaba was a great opportunity to do so. And Charlie Munger is one of the best in the business, in my personal opinion on it. And so I have no problem owning as much Alibaba as I do right now, and I think it's going to do really well. But again, do your own due diligence. Don't listen to someone on YouTube. So thank you guys so much for watching this. I really, really do appreciate it. Thank you if you stayed all the way to the end. I'll catch you guys on the other side. Take care, and God bless.